is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I am Alex Tapscott here with Andrew Young. Andrew, for the past couple of years, we've talked about the growing adoption of crypto assets by do-it-yourself investors, advisors, and institutions, and described how companies like BlackRock, Fidelity, and others have come into this space in a big way. But there's one firm that's been at it longer than just about any and has really helped to create the market for listed crypto ETFs, funds, and other kinds of strategies. And that's Bitwise. Now, we had Hunter Horsley, the CEO of Bitwise, on the podcast a few months ago where he talked about the business. And we're very fortunate today to have Matt Hougan, who's the Chief Investment Officer. And Matt, for anyone who's on Twitter and follows what's going on in crypto, I think is one of the most articulate voices when it comes to explaining the investment case for crypto and why investors ought to care to a mainstream audience. And because of that, he, along with the team, has been enormously successful in growing Bitwise to over $10 billion of assets. The company has funds that you might expect, a Bitcoin ETF and Ethereum ETF, but they have a few other really interesting strategies that I'm looking forward to discussing on this conversation. They have BitQ, which is a fund that invests into businesses that I think are leading or stand to benefit from the adoption of this technology. They have a fund that invests across large cap crypto, and another one that invests into businesses that hold Bitcoin on their balance sheet, which is obviously very topical right now, given the huge growth that we've seen in the digital asset Treasury company space. There have been a few fund launches in the VC world of funds that own DATs, but it's actually was, I think, Bitwise that had this concept first in a fund structure. So a really forward-thinking organization, Matt, a really great advocate. So I'm really looking forward to this discussion. Matt, welcome to the show.
Oh, man, what an introduction. Thank you for having me, and so excited to chat with you about what's going on in the crypto markets.
Yeah, well, so are we. So maybe we'll start with your 2025 prediction report, which came out a few months ago. And Andrew and I were just chatting about this before you hopped on the call. A lot of people provide predictions that are kind of general in nature, but the Bitwise report had several that were extremely specific. There were obviously price predictions for certain assets. One that caught my eye was that you predicted that 5 crypto unicorns would go public in 2025. And I think we know for sure Circle, I think eToro, you could probably count that. And if you want to count any of these DATs, we're probably up to like 20, but I'm not sure that's what you meant. I think you were more referring to, operating businesses. Right. So that was so far so good. I think you're probably going to hit that target. Why don't we talk just about like how the market has evolved and why now seems to be a time when a lot of companies see the public markets as a venue and as a venue and an avenue to raise capital and to reach a new investor audience.
Yeah, absolutely. Loved making those predictions. I like calling us out for being specific. We like to be able to be measurable on our predictions. We won't get them all right, but I think it's better than being general.
Yeah.
On this one, we really saw two things at work. So on the one hand, we were optimistic on the outlook for crypto. And if you're optimistic on the outlook for crypto, you think the market for companies building in this space is growing and substantial and there to be. The other factor that went into that prediction is that the IPO market was severely repressed by US regulators for the 4 years prior to this election, right? Circle, as an example, which for what it's worth has been the most successful IPO in the US in, I think, 10 years, right? It was 25x oversubscribed. The price has gone up 8-fold. It's been huge. Mm-hmm. It tried to go public for 3 or 4 years, but the SEC wouldn't let it out. And so we saw all of these firms that were substantial in size, whether it's eToro or Circle or Kraken or Chainalysis or some of the others that are in the pipeline that were sort of just waiting at the door. So once that regulatory environment changed, we thought they would run out. Now, I do think it's primed for this moment we're in because there are a lot of professional investors, institutional investors, financial advisors who want exposure to crypto, but are more comfortable with these companies. And I think that these IPOs and crypto equity ETPs are feeding into that group that want exposure because they know crypto is happening, but maybe their risk departments aren't comfortable with owning Bitcoin. But you can have exposure to Circle, you can have exposure to Coinbase, you can have exposure to some of these pre-IPO companies. So we think this trend is going to accelerate.
Well, it also helps the investment public understand a bit more how the technology is being used to create real value in the economy. And you look, I think Circle is one of those great examples. Like, I don't know how many people knew what a stablecoin was January 1st of this year, but I can tell you right now that it's entered the vernacular, and we see sell side research reports. There are people on CNBC. All of a sudden, there's this deeper understanding in the investment world of the ways in which tokens and blockchains are being used to change how we move and store value and access financial services. And that, I think, has been a huge vibe shift almost in the market that has helped to contribute to a growing adoption and acceptance of the tech.
Yeah, I absolutely think that's true. Stable coins are sort of a skeuomorphic tool for crypto. There's something that matches our existing understanding of how finance works, but just makes it faster, quicker, better. I find that traditional investors can understand stable coins faster than they could understand Bitcoin, and certainly faster than they understood something theoretical like blockchain, that you're trying to describe how this technology worked. It's like, no, here are dollars that move at the speed of light and settle instantaneously around the world. And people say, oh, that's cool. So I do think it's really helped with the vibe shift. I think it's made crypto real. Yeah. And it's also brought in Wall Street, which is important because it solidifies the regulatory environment for crypto, right? It's no longer crypto versus Wall Street, it's crypto and Wall Street. And that means that Washington is now pro-crypto on a long-term basis. And that's been the other major vibe shift that I think it's brought on.
Yeah, and the pro-crypto, not just in a political sense, but the fact that laws have been put in place that are going to be like the laws survive the administration, become the law of the land, and people start building to the law. And also, to your point about some of those mainstream Wall Street companies, I don't know how excited they are about this, but they have accepted it as their reality, and so they need to build to it or risk being disintermediated or marginalized in some form.
It's exactly right. This is like the moment when Walmart realized it needed to build a website to compete with Amazon, right? Yeah. Now you have Visa, MasterCard, PayPal, Goldman Sachs, everyone realizing that they need to be ready for this era, that we could be dealing with multiple trillions of dollars of stablecoins and multiple trillions of dollars of tokenized real world assets in the next year or two, right? I mean, it's moving at that speed. So I do think that is a major fundamental shift. I do think it's akin to the internet going mainstream. And I don't think we'll ever put the genie back in the bottle. I think now that we're through, it's now part of our mainstream financial infrastructure in a really fundamental way.
One of the one of the predictions I thought was kind of interesting was you had Ethereum making new highs, and we've been talking on this podcast pretty constantly about how both me and Alex are extremely bullish Ethereum, but it's gotten absolutely no love from the market. But then, and kind of like the last month, that's completely shifted. It kind of seems like the catalyst was when Tom Lee went on CNBC and started saying Ethereum is the stablecoin chain. So if you're bullish stablecoins, you should buy Ethereum. Just kind of curious to hear your thoughts on Ethereum and sort of like the thought process behind that prediction.
Yeah, there's been a real vibe shift on Ethereum, to use your word, Alex. I think it started when the Ethereum Foundation replaced its leadership, which happened earlier this year. There was a recognition that it was moving too slow, that it was too ivory tower and not enough real world. And they started to gain momentum. And then you're right, Tom Lee came on board and packaged it in a great marketing scheme, as he always does. Tom's a good friend of mine. And talked about Ethereum as the stablecoin chain. The other thing that's going on beneath the surface, though, which maybe doesn't get talked about enough, is if you think about why Bitcoin has done so well over the last 18 months, it's been a really simple story. where ETFs and corporations have bought something like 5x the new supply.
Yeah.
So there's been more demand than supply. Well, actually, since the start of May, ETFs and corporations have bought 32x the supply of Ethereum because we've had this huge growth in Ethereum ETP flows, right? They did, I think, $5 billion over the last 8 weeks. And we've had this huge growth of corporations buying Ethereum. So the same sort of supply demand story that drove Bitcoin for the last 18 months, and Ethereum just kind of sat there and went down, is now happening in Ethereum. So there's a vibe dynamic and there's a supply demand dynamic. And you have to ask yourself, will these vibes continue? Absolutely. Mm-hmm. Stablecoins and tokenization are going up and to the right from interest levels. And then will the supply demand dynamics continue? I think absolutely. Ethereum inflows don't look to me like they're going to reverse. And these ETH treasury companies are trading at something like 2x their NAV, which means there's going to be more of them. So at least from the short term, I think the trends we've seen since the start of April really are going to persist in ETH, and I'm pretty bullish, and I think it'll get to new all-time highs.
Yeah.
Yeah. I mean, Tom, sorry, just real quick, because Tom actually went on, I think, CoinDesk yesterday or 2 days ago and was calling for potentially 15K ETH by the end of the year. Is that just from all of these, obviously he's got BitMine and all these, and there's all these Ethereum treasury plays, exactly like you said. It seems like we're in like the early part of this acceleration. Do you kind of share his level of optimism, or are you a little bit more tempered, or just kind of curious for the second half of the year?
It's so funny you raised that. I got yelled at by the Ethereum community for forecasting it could top 5,000. I got all these angry emails. I was like, guys, it's at 2,500. This is a double in 6 months. That's bullish. What are you talking about?
Not for crypto people.
Crypto people. Yeah, 100% in 6 months.
100% in 6 months.
Is bearish. I don't know about 15K. I mean, that's extraordinary. I would love for him to be right. I am more tempered than that. I think we get above new all-time highs. I think it may well outperform Bitcoin through the end of the year, and I'm very bullish on Bitcoin's price. But I don't know that we, what is that, a 4.5x from here? I'm not sure that that's in the cards. But I do think the trends are all in its favor. Supply-demand dynamics, stablecoin and tokenization interest. I think it's a very bullish outlook for Ethereum. Maybe not Tom Lee bullish, but very bullish.
Well, I saw a CEO of one of these Ethereum digital asset vehicles basically saying 90% of all stablecoins and RWAs are deployed on Ethereum. And so if you're interested in stablecoins, you should be interested in Ethereum. Now, what he didn't mention was that a lot of that is on layer 2 networks, and that Ethereum, the main chain, has some scaling challenges, on its own. And there's some nuance to that. But it is directionally correct that Ethereum is the platform where a lot of the things that people are most excited about started, and where a lot of the growth remains. So in a way, again, going back to other businesses going public, Circle and stablecoins entering the vernacular and becoming this accepted thing that everyone understands is going to be very innovative. It's almost like, well, if you really want exposure to the applications that are being built on top of these networks, why not just buy the underlying network, right? Like in the first era of the web, you couldn't buy the internet, you couldn't buy a share of TCP/IP, but with this, you can be a stakeholder in the underlying network, and you don't need to know which company and which stablecoin and which asset and which application will be successful. You just have to believe that the whole ecosystem will grow. And so you can get exposure that way. Andrew, I wanted to ask you a question, actually. So Matt mentioned the supply-demand imbalance. And we've talked about how Ethereum historically has had times where the supply has actually declined a little bit because of the fee burn function. And I'm wondering right now if that's the case. And also, it isn't right now, right? So it's like there is a growth that's happening. But is there a reflexivity to this almost, where it's like if there's more network more mind share of Ethereum, maybe more network activity increases fee revenue, contributes to the burn. So the supply demand imbalance grows even more out of whack because the supply is growing slower or shrinking.
Yeah.
I don't know, Andrew, Matt, Andrew, why don't you go?
Yeah. Yeah, I'll let Matt jump in as well. But I think right now the ETH supply, just looking at ultrasound.money, which is a website that tracks it, it looks like it's 68 basis points of new supply per year on an annualized basis. The thing is,
Pretty low.
though, what's really, yeah, it's still very low.
Compared to most outputs. Like, I think
The thing with
3.5%. Yeah.
Yeah, and this actually really ties into what was going to be my next question to Matt about his Coinbase prediction. But what's interesting to me about Ethereum and I think Coinbase has a little bit of this as well, is that the valuations are always the cheapest, typically at the top of the cycle, and so just because there's the most activity, and so I totally agree with you, Alex. Like, there's a ton of reflexivity. Like, we'll have more and more activity. Gas fees presumably will increase pretty dramatically, and the multiple for Ethereum will actually look probably the cheapest when it's at all-time highs. And I was looking at Coinbase, and it was kind of a similar dynamic last cycle where the P multiple was actually quite low, right as it topped. So yeah, I'm just kind of curious to hear what Matt thinks about if that's kind of like sort of shares that same sort of sentiment.
Yeah, I think that's a really great point. When we think about Coinbase's or Ethereum's long-term valuation, I think you need to treat it akin to how you treat a cyclical stock, which is effectively to blend the earnings across a full cycle, right? Particularly because crypto has been so cyclical. I think it'll be less cyclical going forward, but you can't just look at peak earnings because, as you said, valuations would look cheapest at that point. If you look at Coinbase historically, if you blend earnings or maybe do an exponential weighting of blended earnings over the last 4 years, I think you get something closer to its true valuation. I don't know if you're familiar with the CAPE statistics that Professor Schiller used to put out about the stock market, but he would look at price to earnings across like a 10-year period. I think in crypto you have to do something similar to that, or you can take the approach that's equally appealing to me, which is we're still in the very early phases of this, right? And so what matters is market share. To Alex's point, a lot of activity is taking place on layer twos on ETH. It's very dispersed. But from my view, the ETH bet is that a huge chunk of the world's money and assets will move over ETH. That's the bet you're making. And if that's right, it's not a $400 billion asset.
Yeah.
Right. It's a $4 trillion asset or something above that. And that's like enough valuation work. Really, I can do the DCA stuff. I can do, but in the end, that's the bet I'm making when I buy ETH, is that this will be the rails for most of the world's money and assets, the same way the internet is the rails for the world's communication. And boy, will that be valuable. So I sort of think you can take either approach when you think about it.
Yeah. No, that's great. Matt, you mentioned Tom Lee and these Ethereum treasury companies and the Bitcoin ones as well have gathered just a crazy amount of assets. But it doesn't seem to be impacting the ETF business negatively at all. I mean, you can't prove the counterfactual. Like maybe these assets would have flown to the ETFs rather than the DATs, but I get the feeling that the whole pie is growing here because I look at like Bitwise's assets. I know you guys have grown from 3 billion to about 10 billion, and surely some of that is price appreciation. But I know that these Ethereum ETFs have had 12 straight weeks of assets coming in, as well as the Tom Lee entities also gathering assets. So, do you see this as sort of the rising tide lifts all boats?
It's definitely the rising tide lifts all boats. I'll give you a historical example from my early days. Before I joined Bitwise in 2018, I was CEO of ETF.com and spent more than a decade in the ETF business.
Yeah.
And people ask the same questions when the gold ETFs launched in 2004. Will this cannibalize other ways that people purchase gold? Will they stop buying gold bars and coins? And what we saw was gold ETF assets went up substantially. They eventually got above $100 billion. And the number of people buying gold coins and bars also grew 3 or 4x. And the reason was that the ETFs helped make gold a mainstream institutional asset. So it dramatically broadened the market and people found all these different ways to add in. So I think what Bitcoin ETFs have done is they've helped push Bitcoin into the mainstream of institutional adoption, dramatically widen the pie. And yes, of course, some people will find these other ways to gain exposure. They want the levered style exposure that MicroStrategy provides. But we're not sad about that at Bitwise. In the same way, I compete with BlackRock, and I wish I had their assets and their Bitcoin ETF. But BlackRock being in the market has grown the market for Bitwise as well. So at this point, it's just about growing the pie. And I think that's what's happening with these Bitcoin and ETH treasury companies.
Yeah, you mentioned gold. Our predecessor firm to 9 Point Partners, Sprott, launched the Sprott Physical Gold Trust in the US, which gathered, I think it said over $10 billion of assets. And that was launched after the ETFs became, the gold ETF launched, because investors, there was more ways to get exposure, and investors were looking for other avenues. And what we promised was that when you were buying our ETF, you were getting physical gold. You know, there was the proof of provenance, where it was stored, and all the rest of it. And I actually think about your business and how Bitwise tries to differentiate itself in a crowded market, right? When it comes to Bitcoin and Ethereum, you know, sort of proof of reserve calculations, I think are actually almost very similar to how the Fizz, which is the Sprott vehicle, used to demonstrate, you know, how it owned the gold, right? Can you talk about differentiation a little bit in the market?
Yeah, absolutely. That's exactly right. That's one of the two main ways we differentiate. And I love the analogy to Sprott. That was an example, right? Sprott was sort of like gold exposure for people who really understood and cared about the gold market.
Yeah, which is so similar to Bitcoin in a way, because there are people in the Bitcoin world who are like, if I'm going to buy an ETF rather than custodying my own Bitcoin, which is the same gold investor, like the kinds of gold investors, like if I'm going to buy a trust rather than custodying my own gold, I need some added assurances, you know? And so I didn't want to interrupt.
No, that's exactly right. Right. There is this group of people that are trust but verify people.
Yeah.
And they're endemic in these hard asset spaces, and they're a really important constituency. So yeah, we do proof of reserves and transparency. We do things like donate 10% of our profits to Bitcoin core developers to support the ecosystem. We sponsor, Bitcoin core people. All of that is one way we differentiate, by really aligning ourselves with the values that this part of the market cares about. Not everyone cares about that. Some people care more about BlackRock's brand. That's fine, but that's one of the things we do. The other ways we try to differentiate, we have a 25-person sales team that all they do is talk to financial professionals about Bitcoin, whether it's up or down. And one thing we've seen since we launched in 2017 is we gain a lot of customers in the bear markets, because suddenly the big name firms stop talking about crypto because they have 1,000 different ETFs that they can sell. We have crypto ETFs. That's all we do. And so we're there to talk people through bull and bear markets alike. And then, we lean into education, right? We do things like we wrote the CFA's Guide to Crypto. We didn't get paid for that, but that's a way to help grow this ecosystem. Bitwise will do well if crypto does well, if Bitcoin does well, if Ethereum does well. And so we try to align with contributing to those ecosystems' growth. And we think if we do that, we'll create a valuable space for us.
Yeah, the funny, I guess, meme is whenever it seems like the last two cycles at the top of the market, Jamie Dimon would start talking, positively about crypto, and there's maybe a use for enterprise blockchains, and then you would hear rumors of Goldman Sachs starting up a trading desk, and then as soon as it would crash, they'd be like, "Nope, Bitcoin's horrible. We should ban it. Don't allow it." And it seems like every time, like TradFi sentiment would peak at the top, and then completely vanish. And that's the interesting thing to me about crypto, like the alpha of working in the industry, is that if you're sort of just like delusionally bullish enough and keep working through the inevitable 2 to 3 year bear market, you're always kind of well set up for the 1 year and 4 years where things really, really take off. So
maybe this time it'll last longer than a year, Andrew. I don't know, Matt, if you have any thoughts on that. Like, is it possible that we get regulations and business adoption and all these things that we've been talking about, that we put an end to the boom and bust cycle, kind of like how the boom and bust of the late 19th century kind of gave way to a bit more stability at some point?
I do think the market is going to be more stable in the past. I think some of the factors that drove that boom and bust are now diminished. So an example of those, I think the impact of the halving is smaller, just mathematically. It's half as big each time. I think if you look at the interest rate cycle, we're at a different point in the interest rate cycle than we were in the 2022 and 2018 bear markets when interest rates were going up. Now they're liable to go down as up, right? So that's a different situation. And I do think that the advent of regulation will reduce the blow up risk that has been the catalyst of so many sharp pullbacks, right? If you go
Right.
way back in time, what caused the blow up in 2014? It was Mt. Gox collapsing. What caused the blow up in 2018? It was ICOs being shut down. What contributed to the blow up in 2022? It was a cavalcade of disasters: Luna, FTX, 3 Hours Capital, etc. Now that we have, and as we get better regulation, you would expect that to be reduced. And then at the same time, you do have institutions turning towards crypto. And unlike retail, they're battleships. They're not speedboats, right? They take years to turn. One of my favorite statistics and most painful statistics is the average Bitwise customer allocates after about 8 to 10 meetings. If you think about what that means for a pension fund that started looking at Bitcoin when the ETF launched, they haven't gotten through 8 quarterly meetings yet. That's the speed. They'll get there in 2026. So I do think for that reason, the cyclicality will be compressed. There'll still be volatility, but I don't think we'll see 70% drawdowns in the future.
Do you think
those are over?
Yeah, and do you think that sort of dynamic is maybe part of the reason why we're seeing so much speculative capital in the TradFi equity markets versus sort of like the altcoin market has a relatively low amount of speculative capital, at least compared to prior cycles, right? Like it seems like the not mania, but like it definitely seems like the capital flows are in the equity markets this time instead. I mean, you have little pockets with, AI agents had a little bit of a boom, meme coins had a bit of a craze, but I'm just kind of curious is that.
Yeah, it's alt season in the traditional capital markets for sure. Bitcoin Treasury, ETH Treasury companies, IPOs. I think that's part of it, Andrew. And part of it is like, look, a lot of people moved into the market when Bitcoin ETFs launched in January. The traditional alt cycle was like people would buy Bitcoin, it would go up, they would get wealthy, and then the capital would flow downhill into riskier assets. People bought Bitcoin ETFs, they got wealthy, and the capital is flowing downhill into riskier assets, but within the TradFi ecosystem, because that's where that capital is, right? And that's part of what explains why we're getting ETH Treasury companies and now Sol Treasury companies and everything else. It's the same altcoin cycle. This isn't my idea. I've borrowed this idea from Scott Melker, but I think there is this TradFi altcoin season going on.
Yeah, that's a great point. Yeah. It's a great point. Like not just that it's happening here, but the reason is because the capital, like the assets grew within the ETFs to start. And so if you own a Bitcoin ETF and you have feeling that wealth effect and you want to buy something else, you're not going to go into like MetaMask. You're going to go from the Bitcoin ETF to something that you can own in your brokerage account, like you would in any other cycle. It's like the IPO cycle in the .com era almost in a way.
Totally. Yep.
Yeah. Oh,
do you think that means there's an opportunity in the altcoin market? Because in a way, like it hasn't really been hit by the hot ball of money yet.
Overlooked. Absolutely. Yes. There are a number of really interesting projects that are overlooked. I think there's a quiet DeFi boom that's being overlooked to tie into the title of this. You look at Uniswap volumes versus Coinbase volumes in Q1, they were higher. Never happened before. You look at what's going on Aave, right, through the moon. You look at Ondo. So I do think there are pockets of the altcoin market that are being overlooked because the hot ball of money can't get to them. And I'm pretty excited about those pockets.
Yeah. Yeah, that's so fascinating. Well, so if November of this year, only 4 crypto unicorns have gone public, will Bitwise file to go public in order to help fulfill your prediction?
I hadn't thought of that. That's a good idea. I'm going to take that to Hunter and see what he thinks.
I know you probably can't talk about any specifics, but it's not unusual for a growth business like yourself that's been around for a decade to go to the public markets. A lot of other companies are doing. Is that something you've considered?
I mean, look, Bitwise is trying to build the iconic crypto asset manager, right? There's specialist asset managers in each area of the market. We think that space is open in crypto. There are a few other firms that do it very well as well, but we want to be that. Whether that means being private or public, that's actually above my pay grade. But I'm here to build, the iconic manager for crypto. We're here for the long haul.
Well, we've enjoyed watching how Bitwise has grown with the market, how it's helped lead the market. And I've really enjoyed this conversation, Matt. Thank you so much for joining us. It was just wonderful to have you. We look forward to maybe having you or Hunter back sometime in the future. We'll maybe we should get you and Tom Lee on the pod.
Let's do it. That'd be fun.
My people will talk to your people.
That sounds good. I really enjoyed this. Great questions. Fun conversation. Thanks for having me.
Great. Well, that's it for this week's episode of DeFi Decoded. Please remember to like, subscribe, comment. It helps other people find the episode. Until next week, have a good one. Take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.